Bitcoin update. Gentlemen will know that we've been very strongly Bitcoin focused at the expense of Ethereum for quite an extended period, quite bearish Ethereum until just stirring recently. This is what happened on Bitcoin, though. It wasn't all joy for Bitcoin. We had a difficult season during this period of wild swings. We actually had a downside inverted HVF that made a target on some exchanges. Then that very strong rally was very, very dominant and spoke louds of words. We got a setup there. It broke down. We were expecting a relative high too, so we were more open to the down break. It did occur. It ran down, supported in this funnel level of this inverted, then rallied back up, leaving us with another high too, very close to this high too. So this was highly ascending with a level all just itching just below the all-time lows at this level over here, 2978. 2978. That seems like a long time ago. This is dollars and it's Tether and it's Poloniex. So this then turned into an HVF in its own accord with a breakout there. That target was made. That geometry generated a wind-up pattern that led to another break, and that target was made. I'll show you that on shorter time frames. But before we leave the bigger time frame, I want to show you the major macro geometry that was created by this low one and the big sell-off of the inverted from the all-time high. That geometry was up top here and is presented to this midpoint here, which is halfway between your H3 and your L3, which is access, and that all ties to HVF theory and methodology. So that was your midpoint between your high 3 and your low 3, that line there. That was your high 3 over there. That was your low 3, all part of that violent spike. So we project upwards from there and we attain a target which has just been run. We attain a target that has just been run in a melt up, and we are now in a point of selling off. This points to a little bit of stagnation now for Bitcoin. Hey, you can't blame it. Look at that. That move from around about 5 o'clock. What day was that? Let's get a time frame. 16th of July. Since the 16th of July at 1.8, it's gone to 3.9. And not just 3.9, it's gone to 3.952. It's not going to do the $4,000 in the same pace for me. It will do it at some point. It's not going to do it in the same pace. We're going to churn and pull back. What might happen? Well, the gift might come. It might rotate a little bit into Ethereum and the others. This has really, really moved really strongly. So clearing the uncertainty on Bitcoin certainly worked in favor. Let's get that in the midpoint there. Roughly there, for nicketing and finishing. But anyway, let's have a look at that smaller detail that occurred, and you can follow how utilizing HVF method and why it's the best method for knowing what comes next and gives you the process for what to do, will help you. So we had your breakdown, you had your funnel bounce, which is key for support. Then you had this H2 and then the final low 3 here that you've all got. We now made that target. That's why we're saying we've gone from strong bull to actually expecting underperformance from it on the Bitcoin, and time to rotate out of the Bitcoins a little bit and possibly into Ethereum, and there will be other possible alts, assuming this doesn't turn into a full-blown crypto sell-off, in which case Bitcoin still might be one of the best places apart from Tether. I don't think that's the big sell-off. I don't think we're going to be getting that. It just doesn't smell that way. The market has been really, really strong, but Bitcoin needs a rest, and I think the others might catch up in time after this move. So there was the setup, there was the wind up, just this little fractal of an HVF, and its 3 levels. Its midpoint was there. That was the low 3 here, and your mid for that was actually around there. That was your low 3, that was your high 3. After you came up here, that little move gave you this as a target before you would slow down for a while. You did slow down for a while, but not that very long. This was in a overperformance mode. It was a really big setup pattern. So you slowed down for a small bit. Let's show you that small bit. That was it there. You got a pullback. You got a pullback from your 3293 and down to 3142. So almost from 3,300 down to 3,140s. It's worth knowing about, and it's worth being prepared. But this turned into a wind-up. That created a primer. Yes, there's a primer in there. Squeeze within a squeeze. Learn what a primer is by getting into one of our programs and how it gives you a gift that keeps on giving. But anyway, this was your larger funnel. I put it in a yellow box. What happens? Break, break, break. Target made. Awesome. Job done real quickly on this little wind-up, which boosted this target to that target. You keep holding long as you get HVFs. That would have been your stop. Pull back from there. Where do you end up? You have an exhaustive attempt, marginally higher high. Let's look at that price behavior, because we did spot a couple of things that pointed to a little bit of weakness to come for Bitcoin, and weakness did come. So let's pull it in and have a look. This was all drawn for you as and when at the time and blogged on our premium blog member site for all our trading metamorphosis guys. Essentially a neckline here. You had a head and shoulders. You also got a micro head and shoulders all sitting on this target level we had identified from the previous HVF. This is drawing, this is extracting the information from the geometry that the charts are giving you. So that little head and shoulders, neckline nearest round, logical number 3420, traded down, sold you off there, made on the wicks, one more dip down and it was done. But you had your rally. We drew the thought of where the shoulder would be. They're still in the place where we thought they might be. It went a little higher and it died again at your target level previously. Isn't that interesting? Down, down, down she comes. This was your neckline. I need to extend it forward because I haven't visited this head and shoulders in a while. Nearest logical round number 3,370. That captures both the dips of the left shoulder low and the right shoulder low, and that gives you a projected target from the top there down to there, projected down. It suggested that we'd fall all the way to the funnel. That didn't seem very likely at the time. Boy oh boy did it come, and in fact you got a micro. If you're prepared to drop the time frames, I don't want this clip to be too long, and if you want the full educational you need to do the program, but you actually got an inverted head and shoulders, which we love, on the right shoulder projecting down. Guess where the axis point and the midpoint was? You betcha, it was your next line on your HVF style head and shoulders. We don't do head and shoulders like traditional technical analysts. We realize that it's the key level of significance and the horizontal line. You don't bother yourself with angled up and down side lines on head and shoulders. That target was generated and it was met and overshot because you had both HVF on the right shoulder and an a head and shoulders that had a target that was even further away. So you could have broken into this trade with a really tight stop up and top there. You would have had that target made, and you would have made your pull that through, because I haven't visited this in a while, your target made on that final dip down. Did it dip a little lower? Yes sir, it did. What was the key element? The low 3 of the previous funnel held. That told you it is not, repeat not, it is not, repeat not, going to go bearish. It's supported, and that means the HVF is holding, the key levels is holding. It started to rally. Did it hold? Yes, it did. What did it do? Ran into the previous funnel of the downside right shoulder, inverted head and shoulders. It rallied into it, it ran into it, and it found resistance there. Bounce, bounce, bounce in it. There's that neckline, head and shoulders, all these key levels of significance. You'll learn all about how we do key levels of significance on the Trading Metamorphosis program. What did you get? You get a wind up HVF over there. Why? Because you need to wind up to smash through what is now a resistance point, because you've had a downside structure on the way down. You need to hurdle that fence again. And what do you do to hurdle fence? You use HVF method to do it. Of course you do. That's what you do. And so it did, and so it did, and so it did. It wound up. It created a target. What will that target do? It will be a target that will take you through the funnel that was resistance on the downside, which stopped you on your rebound back to the upside. So this is utilizing HVF method to understand the movements of Bitcoin against dollar. Who gets this? Who thinks this is awesome? I do. Anyway, I would say that. Anyway, never mind. Let's take that target and let's see how it did. I'm drawing this one live, by the way. I spotted it at the time. I can't keep updating all these charts. There's so much going on in the crypto markets, and it's absolutely awesome. We're in Neo, and thankfully we also had a bit of metal, which has been doing awesome. I'll do a YouTube on that as well. That's the key round number. Guess what? Oh dear, just happened to catch a high point. Isn't that another coincidence? Well, I don't know. You leave it to you to decide. This is HVF method at work. Caught that. What did you do? You pull back. Where will you support? Guess what? What was previously resistance and is now support, the previous inverted HVF funnel now supports you, and you go higher. This is Bitcoin. This is Bitcoin showing its strength. This is HVF methodology showing its strength. What do you do when you get supported on that funnel? Well, you go straight into a winding up process. What does that mean? Well, if you're markets, you like the HVF method, so you wind up with an HVF. Isn't that funny? Keeps happening, doesn't it? Must be these coincidences keep showing up like that. I hate it when that happens. Anyway, down to the low one. There's your H2. These are joint H2, bit complex with a bit of dip. It was a little bit choppy, but that clearly is the ironing out, the volatility getting lower. That's setting up the next move up. What do you get? You get your H3 there, and you get your low 3. So this is showing you how it all rolled and how we were covering it in Basecamp, how you would have known, all around the axis level, just above the 3420. We always start tipping our hand that we're going to move up. So the 3420 isn't perfectly in the middle because we start moving up already. You see, your midpoint's just above it. But clearly the 3420 was the key number. Why was it the key number? Because it was the key number for the target over here for the wind-up HVF, which also had a midpoint level of 3340 in it. So there you go. You can see these key levels of significance. They keep playing, they keep playing, keep playing. This was an important level. This level, if you extended it all the way through, was the target of the original pattern. Wait for it. That's why we're winding up. We want to get a proper leg up. So you got that target, you popped up, and then you get overperformance. This thing started to run, and it started to run, and that's why, and that brings us into where we are today. So understanding price behavior is critical to make the right decisions in crypto. The ability to do this and to get better outcomes will serve you exceedingly well. Look at that little high, and then it pulled back, churned around a while, but still it was very dominant, very strong, lots of setups to the upside, and so she goes. Damn, they just keep happening on the lower time frames. You got to just keep drawing them, otherwise you're not doing your charting proper. There you go. This keeps telling you continuation to the upside. Keep on keeping on. Don't be afraid. Keep loving. Keep loving as long as it keeps giving. Up. Let's get it to current time frame. Stop drawing lines down there, Francis. Click to the cursor and let's pull it through. There we go. Little bit of a flag like pullback, and then we finally get a bearish grind like this. Too steep. Late bulls still charging. You've just run that. Everyone's screaming for the 4,000. What's it going to do? It's not going to do it. It's going to spill down. All the late runners all wanting to say they're in for the ride through the 4,000 levels. They're going to get spanked. They're going to get spanked and a little bit down. What happens in the meantime? Maybe some money goes into the other. So this is either a slight squeeze or a little bit flag-like. I think it's slightly falling wedge category. So that's what you're getting. Leg up, target made, done, job. Look at that. Goes a little bit through the target. You're closed. That closure is all the way on that melt-up HVF. Oh, it's too far, Francis. That was that melt-up HVF way back down here. That we were showing you over there. So people say this stuff doesn't work. I don't know. I think it works. It certainly serves me. We're doing great here. Of course, everybody does great in a bull market, but this has gone especially great because we were quite weighted Bitcoin, quite weighted Neo, quite weighted metal, and we just started a small nibble on Ethereum. It could be, assuming that this is just a normal pullback for Bitcoin, that we get some Ethereum benefit. I'm looking at Ethereum and I'll tell you about it if I can just find the browser. Too many charts. Let's have a look at that one. And here is the Ethereum. Let me just get it up and bring it over. Here's the Ethereum, first set up in a new trend. This is on a 60 minutes. I'm just on the Bitfinex, but there's I wouldn't use that exchange for my charting generally. Not quite sure how I ended up. This has all been bear for Ethereum for quite a while now, but there has been a channel that has been working its way up. And you bottomed out down here. This was first set up in a new trend, bit of a break. We're coming back down to funnel. We did run, in all likelihood, the target on what was a high slung setup, which was suggesting either that we're going to be very dominant strong, or that this is a first setup in a new trend, or that it might fizzle. But in actual fact, it has made that target by some degree. This has been on a descending grind line, so at some point this will get a smash up. So it's been grinded down slowly, but there's been pushback along the way. I think this funnel may support, in which case a rotation might turn out, but wait for it. Maybe you can see the bullish tails on the hammers here, and the hammers again. It could dip one more time, but there is retreating buying here. It's not all capitulation. There is not a P off the roof pattern, but you did get that grinding ascending wedge that warned it would sell off over here after probably target being made there at the 92.3. What I think we need to see more strength from Ethereum. It could come, but so far it's generally disappointed. So keep your Bitcoin to a degree and switch in and look at the other alt majors. By the way, coin market cap, we had a look at them to see where everything was standing. So moving windows around, This was one of the lowest down of the serious coins. I don't know enough about IOTA. I don't know if I can take him seriously out of the top 10, 20. When you're switching out of Bitcoin for a major holding, you want to be in one of the majors. The rest are all significantly lower generally, apart from IOTA, which, as I say, I'm just not qualified for, and BitConnect as well. Don't know enough about these guys. But the majors, there's no joy to be had in Litecoin. NEM is a bit down, a bit much. Ripple is an absolute avoid and remains a avoid. I can see it dropping in value to even being in the 2s, having been in the 24s potential. There's a big outside. Stay away from Ripple in my view. So in terms of that, Ethereum is actually, of the major serious coins, probably one of the least down. So we'll watch that to see if that Bitcoin will finally rest a little bit. It's certainly done a lot. Remember, when things do a lot, they need to rest. So be aware of that. And there is signs that is a little bit of a shooting star. It doesn't have to sell off like a beast. It could just wind up like it did here and carry on up. It could still remain the boss. So it just means it might rest like it did there and over here. It may even have little head and shoulders, a little bit of a sell-off. So always hold some Bitcoin in your portfolio is my view. Minimum 30% when you bearish it. And I'm not sure we're that far to be bearish, but there is the possibility of lack of progress decay. Long clip, lots to show you. I've got more clips to come. This is Crypto Sniper. If you want to find out how to get the maximum out of your trading and be part of a community that's doing this, get in touch on the Market Sniper website. You need to go to contact us. So you go to the Market Sniper. This will be the homepage that you'll see. London Bridge is falling down on the beginning there. Let's hope it stays up a little longer. Contact us and book in to have a chat with me over here. Put your details in. Find out more about trading cryptos with HVF method. The ideal. Get your mindset sorted straight. Get your methodology that keeps you in the trade when you need to be kept in the trade with overperformance measures, and also be part of the market that is expanding at probably one of the greatest levels that I potentially see. $1 trillion, well, others have said $1 trillion coming in during 2018. Think about what that's going to mean for the crypto market. The Bilderberg people are talking about it. Insiders are spilling the beans. Okay, that's me done. Long clip. Hope you enjoy.